Welcome to weekly Forex forecast from Forex Trading Wizard Academy. Traders, I will be doing a complete multi-time frame analysis of all the currency pairs that you can see on the list for the upcoming week from 24th till the 28th of June. Now, before I go to the in-depth analysis, this week we are giving away the full discounted coupon, which is $500 worth of coupon to join towards the lifetime access where you can learn and grow as a trader with me, and also you can access all my trading tool. You can find the information just below this video in the description. Once you complete the step, let us know via return email. We will be sending you the full $500 worth of coupon straight to your email. With that said, let's see this week what we have. Now, as you can see, this is the last week of the month. Last week of the month is always volatile, as there will be a monthly close coming, expecting increased volatility in the market, which is in fact good for us as a trader. When there are more volatility, we can have more trading opportunity. And as you have seen past week also, we had a great week in the live session as well. So let's begin. First of all, this week what we can see in the market. I will begin with DXY, and then one by one we will be looking at other currency and instrument as well as gold. So with that in mind, let's begin first of all with DXY. Now, before I start the full analysis, trader, make sure that you smash the like button and also hit that subscribe button if you haven't done yet. Okay, trader, so let's begin with monthly with DXY. Why monthly? Because monthly, weekly, higher time frame, it will give you a clear direction, removing all the noise from the lower time frame. Starting with the monthly chart on DXY, what we can see that from the monthly, this is a long-term bull market. If you look at here, what we can see that this is the monthly impulse, followed by previous months we have seen an expected correction, which is the red candle. In fact, this month the market has broken that low, and as soon as the market became overextended to the downside after break of this low, we have seen that DXY has got a bounce towards the upside. Now, with that bounce, what we can expect on DXY for the price to go ahead and then to create a new higher high. Now, if we look at the weekly chart to see a bit more clearer picture, we can see that there is a weekly pin bar. The market has broken that liquidity zone from this weekly pin bar, followed by previous week we have seen a middleman formation. Now, this weekly middleman is also a bullish continuation pattern, and expecting DXY to trend towards the upside to create a new higher high. Now, this is the resistance line where from the weekly we can see that the price is approaching that liquidity zone, and we can expect on DXY for the price to go ahead now to break that high to create a new higher high. This is the weekly candle where we can see that the market is trending to the upside. Now, looking at daily, a bit more lower time frame, we can see that the market trend is very clear. We have seen that there was a breakdown here, which is in fact a false breakdown, and we have seen that the smart money zone, which is the order block, from that order block the market has broken below with more than 2 ATR candle, grabbed that liquidity, and then we have seen that it has broken towards the upside, followed by pullback, and it is in another impulsive phase, expecting DXY to break and then to go ahead to create a higher high. Now, this high is absolutely important because there was a massive drop happen from this high, and there is a liquidity in that zone, and as the market moves from liquidity to liquidity, expecting DXY to go ahead and grab the liquidity before dropping down or even breaking that high to the upside. So we still can expect for the price to remain bullish. Now from the further lower time frame, from the 4-hour perspective, we can see that there is a clear uptrending market structure. We have seen there was a breakdown, a strong impulse followed by a bull flag, and from that bull flag the market managed to bounce to the upside. This is a move followed by another narrow bull flag, and we see that it's maintaining typical bullish market structure. Now as this is the intraday time frame, expecting for DXY to break below any of this swing low broken, especially I will be waiting for DXY to break further any of this liquidity zone and then to bounce back up to create a new higher high. So I think that this week we might see that DXY following this pattern, this wave, to create a new uptrending market structure. Now based on that wave on DXY, we can analyze now euro dollar and GBPUSD. So let's begin with the euro dollar to see how the market might be doing. Now euro dollar, if we look at again the monthly, now as you know the DXY is almost mirroring the euro dollar, so we can see that almost the same reflection here. We have seen that back-to-back 4 months of drop followed by a correction, followed by we can see the market has broken that high, grabbed the liquidity, and then we have seen that strong breakdown from this monthly high. So what we can expect from the monthly, as there is a last week of the month, we might see initial pullback to the upside and then continuation towards the downside. If we look at the weekly chart, expansion of this structure, we can see that there is a resistance line here, and this is a resistance here, resistance here, resistance here, which is in fact a very important level of resistance from the euro dollar perspective from the weekly. And we have seen 3 weeks of drop, expecting it to go up for a deeper pullback where there is a high liquidity, and we can expect for the price to come down to the downside after a retest. Now looking at the daily chart to see how the price is evolving, we can see that from the daily, this is where there is a smart money zone, which is in fact exactly mirror of DXY. We can see that there was a liquidity grab, and this is a smart money zone where there is a high liquidity. And with that smart money, what we can expect on euro dollar for the price to go ahead, retest, and then to drop down in that direction to create a new lower low. So looking at further lower time frame on euro dollar, what we can see that this is a downtrending market structure. There is a big drop, pullback, and the market is forming series of lower high and lower low, which is a downtrending market structure on euro USD. So what we can expect on euro dollar for the price to go ahead, retest, and then to trend in that direction. So I will be waiting for initial pullback to any of this important resistance line, as which is exactly the mirror of DXY, expecting euro dollar to go up for a pullback to break any of this important liquidity zone and then to drop back down to this support level. Now let's look at GBP USD again with the monthly chart to see overall picture in the market. Now from the monthly perspective on GBP USD, we can see that previous months a bullish candle, followed by this month the market has broken that high and then has got a strong rejection towards the downside. This is the monthly candle which is closing in couple of days, which is the last day of trading week. I think that we might see initial pullback and then to continue to drop to create a new lower low. Now looking at the weekly chart, what we can see past week's weekly forex forecast probably guys have seen that exactly this is what I expected on GBP USD. We saw that back-to-back 2 dodges followed by another strong bearish pin bar, which is the red pin bar, followed by what we can see that another bearish candle. And what we can expect on GBP USD for the price, I think that we might see again initial pullback and then the continuation towards the downside, as this is where there is a liquidity, and if the market drop back to this liquidity zone, we can expect on GBP USD to drop down and then to create a new lower low. Now if we look at the daily chart on GBP USD, what we can see that from the daily, this is a long consolidation pattern here, and with that consolidation pattern expecting on GBP USD to break below and then to trend to the downside. And this consolidation pattern here on GBPUSD, which is a potential reversal pattern, as we can see there is a liquidity gap here on the daily. It's a massive liquidity gap, as you can see it's more than 280 hour candle, and then has a breakdown pullback, and the market now established in established downtrend. And what we can expect on GBPUSD for the price to at least to drop back below this daily low, which is the 1.2511. Guys, make sure that it's a probability. We might still see continuation again, but the high probability that GBPUSD will drop back to this support level. From the intraday, we can see that there are liquidity here as well. As you can see, this is a previous resistance line, which is an important level of liquidity zone. Expecting GBPUSD to go ahead, grab the liquidity, and then to drop down again to create new lower low. So this is where we can expect for GBPUSD to bounce, grab liquidity, and then to drop down to this important support level. Now let's begin with gold. Now before we progress with the gold traders, if you want to trade gold, euro dollar, GBPJPY, and all the instrument that we are trading in Forex Trading Wizard Academy, we are giving away full discounted coupon to join the lifetime access to be part of the trading community where you can take your trading to the next level. We have limited number of spots to give this week. You can find link below this video. There is a 3 steps, simple step to follow to get access to that $500 discounted coupon available for you today to join the lifetime access. So with that said, let's begin with gold, looking at first of all monthly chart. Now looking at the monthly chart on gold, we can see that this is the monthly price section, where this is the monthly high and the monthly low. In fact, we can see that gold is currently after break of this high, expecting it to drop further towards the downside. Now looking at the weekly chart on gold, what we can see that from the weekly, this is a weekly drop followed by a pullback to the upside on the weekly. Last week we have seen a red candle. In fact, this is also a very important candlestick pattern, as this weekly candle is a liquidity candle, expecting it to drop down to create a new lower low. Now if we look at the daily chart, what we can see that from the daily, this is a long bearish engulfer, which is if you look at the previous day, we have seen a green move and immediate rejection from this liquidity zone. This was an NFP candle, and followed by we have seen a big move to the upside. After this fake out, if you closely look at this green candle is a complete fake out and immediate rejection. This bearish engulfer can be a catalyst for further downside, as we see that this market is now forming a head and shoulder formation in that area. So with that in mind, from the daily, if we look at this daily bearish engulfer, expecting for gold to bounce back up and then to trend in that direction to create new lower low. Now let's look at further lower time frame to see how the market might be doing here. Now what we can see that here is a long bearish engulfer. This is a strong breakdown on gold, and with that breakdown, what we can expect for the price to go ahead for a deeper pullback and then to drop to this support level where there is a high liquidity. So looking at day trading perspective from the 15-minute chart, what we can see that on gold, this is a complete breakdown. It's a massive breakdown on gold last day of trading week. And with that breakdown, we saw that there was quite a few liquidity candle formation along the way. Now, if we look at our liquidity candle tool, we can see that back-to-back 3 liquidity candle formation on 15-minute chart. So we can see that during this 15 minutes breakdown, we have seen, according to my strategy, I see that there are 3 important liquidity candle formation, and we have seen that the market in fact had dropped in that direction. So with that in mind, now where we can find entry opportunity, as you can see that in the last hour of the weekend closure, we saw a consolidation here. Now with that consolidation, less likely that the price will be able to break below without breaking any of this high. Now if you closely look at, we can see that these are the zones where there is liquidity. There's a liquidity here, there's a liquidity here, expecting gold to go ahead and then grab that liquidity and then to drop down to create new lower low. So this is where we will be waiting for potential first entry opportunity. As the market is in a very strong downtrend, we will not be looking to trade to the upside with the market open. And also I will be in depth explaining to you, all of you guys and girls, to trade in the live session. Make sure you also join the live session by subscribing to the channel and also pressing the bell button. Let's look at AUD USD. Looking at the monthly chart on AUD USD, now you can see that from the monthly previous months, a bull candle followed by a narrower candle here on the monthly. Now with this narrow candle, what we can expect on AUD USD for the price to remain bearish to the downside to create new lower low. Now if we look at the weekly chart on AUD USD, what we can see that from the weekly, there is a long wick candle followed by, this is the weekly candle, which is in fact potentially bearish. What I think that AUD USD, we might see that this week after retesting, expecting it to drop down to create a new lower low. Now if we look at the daily chart on AUD USD, what we can see that from the daily time frame, this is the resistance line, and from that resistance, what we can see, this is the resistance here, resistance here, resistance here, resistance here, and from that resistance on AUD USD, expecting it to retest and then to drop down to the downside to create a new lower low. Now from the lower time frame perspective on AUD USD, what we can see that the market from this resistance line form quite a few liquidity grab here. Now this consolidation pattern is, as you can see, a bullish candle followed by strong bearish, followed by a long wick candle, and then complete breakdown in that area on AUD USD, expecting for the price to go ahead, retest, and then to drop down. And this is where we will be waiting for entry opportunity on AUD USD. Now let's look at dollar CAD. Let's see what kind of trading opportunity we have on dollar CAD, looking at the monthly chart to see overall picture in the market. Now from monthly, we can see that dollar CAD this month with the market open, we have seen that was in a bullish momentum. And with this bullish momentum, expecting dollar CAD to remain bullish, as this is the monthly opening. And with that monthly opening, the market as soon as open, we have seen a huge bounce, and now it has come down for a deeper pullback, as we are expecting DXY to remain bullish. Now this week, what we can expect on dollar CAD for the price to retest and then to trend to the upside to create a new higher high. Now if we look at the weekly chart on dollar CAD, what we can see that this is the weekly bullish engulfer. Back to back 2 weeks, we have seen that narrower pullback, expecting dollar CAD to drop further and then to trend to the upside, as long-term picture is still bullish in dollar CAD. Now looking at the daily chart, what we can see that from daily perspective on dollar CAD, there is a doji here on the daily, a long doji followed by another long wick candle followed by another doji. Now what we can see that on dollar CAD for the price, this is the daily move where there is a massive bounce, and this structure is what I think that a pullback. It's a kind of bull flag that we have seen that formed on dollar CAD. Now with this bull flag formation, what we can expect on dollar CAD for the price to drop below this level and then to bounce back towards the upside. Now looking at further lower time frame on dollar CAD, what we can see that this is where the market expecting for the price to drop to this support and then to remain bullish to the upside to create a new higher high. So this is what I think the dollar CAD, we might see the price will break this liquidity zone and then to bounce back up to the upside to create a new higher high. So now let's look at the JPY pairs, how the market has done, looking at the GBPJPY to see how the market is doing, looking at the monthly chart on GBPJPY. Let's see overall picture. Now, long-term picture on GJ, which is in fact a bull market. If you look at GBPJPY, what we can see that it's a very strong impulse followed by consolidation, a breakdown, and then immediate bounce from this level on GJ. Now, with this bounce, this is a complete bounce on GBPJPY, expecting for this price to drop again for a pullback and then to continue to the upside. This is the last week of the month, and what I think that this monthly candle is so far showing is still bullish, and I think we might see that bullish continuation pattern on GBPJPY. Now, if we look at the weekly chart, what we can see that from the weekly also the market is showing bullish continuation pattern. We can see that a very strong impulse correction, the market is forming series of higher high and higher low, which is an uptrending market structure. Now here what we can see that there is a red candle with a long wick at the bottom followed by inverted doji. In fact, this is a pullback, and that pullback has given GJ a strong bullish continuation pattern. Now what we can see here is that this is a bullish candle on GJ. Now with this bull candle, expecting GJ to remain bullish to the upside to create a new higher high. Now looking at the daily chart, where we can see that from the daily, this is a bullish engulfer on GJ. Now if we look at closely in GBPJPY, we have seen that a complete breakdown, and then we have seen an inverted head and shoulder formation, complete breakout from that inverted head and shoulder. Now what we can see here is daily bullish candle. That is in fact a strong liquidity candle, which is also according to my strategy that what I see that here is the liquidity candle formation. Now with that liquidity candle formation, expecting GJ to remain bullish. Now if we look at further lower time frame in that area on GBPJPY, what we can see that the market is maintaining is still very strong bullish market structure. There is a strong liquidity grab here, followed by this impulse on GJ is bullish. If we look at the 15-minute chart, what we can see that the market locally, we have seen a very strong bullish market structure. Last session, we have seen a complete breakdown in the 15-minute chart. I think that with the market open, we might see complete break of structure, which is expected. As you can see that in this day trading perspective on GJ, the market is in a very strong uptrend. So any break of structure is where we can look for buying opportunity on GBPJPY. As soon as we see that GJ has broken from that structure, we will be looking for going long with a high probability trade setup. Now let's look at dollar yen. Now looking at the monthly chart on dollar yen, we can see that from the monthly also this is a bullish market. This is the monthly bull market in dollar yen, a very strong bull market followed by a doji, and we can see that the market again has formed another bullish impulse on the monthly, expecting dollar yen to go ahead and then to create a new higher high. Now if we look at the weekly chart on dollar yen, we can see that from the weekly, this is the weekly candle. There is a doji followed by a rejection followed by another bullish doji. Last week we have seen a complete bullish candle with a full body green, expecting dollar yen to remain bullish to the upside to create a new higher high. Now looking at the daily chart on dollar yen, we can see that from the daily, this is a bullish impulse here. There is a liquidity grab from a long wick doji, followed by we can see a very strong uptrending market structure on dollar yen. We will be waiting for the price to break below for a deeper pullback. If we take the Fibonacci from low to the high, we can expect for the price at least to